TGIF Warriors, I just wanted to do a quick update, follow through on this Monday. Wanted to talk about what was happening in the dollar. My contention is that we're, maybe 100, 150 pips away. Dollar looks on track for heading up there, decent week. So when you get to Fridays, you should take a look at the weekly. I see a pretty decent, strong week in the dollar index. So the 104.80, 105.30 area, 105, I still think is viable. But today the feature is, if you've been watching FX lately, is that euro has been much weaker than the British pound. And I'm looking at what's happening here in euro pound and think that there's at least a possibility. I'd like to see a higher close on the week, that for this last phase down, up in the dollar and down in things like euro, which I'm still looking for 107 as a buy point, that for this last phase of dollar strength, that we're going to see the pound catch up and begin to underperform and even be weaker than the euro, because my targets for the pound are back under 25. So from here, it's 160. I could make a case for maybe 3.5. So from here, it's almost 300 bips, bips. I'm thinking bonds, and in the euro, it's 170. So I think the bigger bang for the buck is going to be on the short side of cable. Although I still think they're going to work as a dollar heads up towards that target. Aussie, I've done a little bit more work, and I'm thinking that it's going to test more like the 64.5 level. I don't think it'll be 65, even though that's 61.8. If I'm looking for at least, there's 170 in euro. 450 would be equal to the left shoulder, 450. So lowering initial buys to 64.50, it's 130 pips away. So I wanted to update you that on the dollar. Also, silver, negative week. Silver had another negative week. There's your daily. We take out these lows, we'll start trading under 22. And I just want to show a couple of things. And if you recall, last year in November, December, I said, you want to wait until 2024, where the major cycle bottom in miners is due. And that definitely was very good advice as you look at something like First Majestic. And First Majestic is not just threatening the low of the move recently, but it could end up testing the low of a low that we made all the way back here in March of 2020, which was the COVID low. And that's down there at 414. We're a half a buck away. And if silver's still not done, we could take out this low. So what I'm talking about is not just something making new weekly lows, monthly lows, but lows all the way back to 3.5 years ago. And that's why I'm really laser focused on the miners. Same thing could happen here in B2G, where if we still have that break in gold to 1940 to 1880, we could trade 220 in BTG. Newmont, although they have mining problems, a lot of golds look like this. So, that's going to come in around 30 bucks, which is just above its low in 2020 on the COVID low. So things are setting up. One thing I do want to bring up, and I'm glad I did not buy it, because I was looking to buy this at 310, but that was going to happen with silver, the physical market, bottoming out. The fact that it got here now, that's why price isn't always everything. So I thought it was going to take 2150 or so silver, with it still trading a buck off that level for us to get down to 310. The fact that it did it yesterday, and I don't even know what the news was, gives me pause. And I'm going to hold up and see what happens when silver's trading at my levels where Fortune is. Perhaps it's going to be with something like, here's another one that's testing and still diverging, Endeavor, and the one that Mike brought up that was taking option flow a week or so ago, and I said it wasn't ready, still may not be ready. This has, I think, a little weaker, yeah, it does, weaker RSI pattern than that other dark horse that I showed you. There might even be something to do in some, not as widely followed trades. So just touching on Bitcoin, I think we're headed towards 32,000, and that's based upon this intersection of the 50 and 200 week, and that would be about halfway back if you count this as wave one and completing wave one here. Now we're going to get a two, and one hell of a rally, $34,000 rally. So if we pull back halfway, 34 could turn into be, 55,000 or so. It could give you 80 grand if this was wave one. And now we're in wave two. Wave three is the money wave. So I think that's going to coincide with the dollar heading lower. And that's really about all I wanted to talk about today. Still think yields haven't peaked yet. So keep an eye on that as well. TLT is working its way into the buy zone. Okay, but it still may not be there. Maybe we're going to go to 90, maybe right here, 88. And then I think there's one more rally that could take us back up towards 110. And in the 10-year, had a good week. And we're already close to the 38% level, cutting through moving averages. Think that maybe we could trade halfway back at 440. And so the big picture is yields rally to 440. Dollar goes up and makes its high at 105. Metals start to bottom. Miners start to bottom. This is an important low. And yields then turn back down and give us something like this from 440, which would take the 10-year to 320, 330, which was a pretty important area. So that's my take on what's happening going into the weekend. I hope that we're giving you an edge, Mike and I, with our ideas. I know it's not easy to be a trader. I lose at times too. I was looking for a breakdown in Apple, and we got that earnings upgrade. Just want to say I'm not short now. My options expired worthless. Okay, they were 180 strikes. Very nice defense of it. If we take out 180 in Apple in the weeks ahead, that's your sell signal. So if you're long here and you're long from here, you do not want to see Apple trade under 180. That's going to open the trap door. We'll see if it could fill the gap next week. And we'll also see if Apple could put in one more high over the next couple months. Because right now I see a 1 and a 2, and maybe we're going to get a 3 to some level over 200, maybe 215 or so, 220. And there's no way that that's going to confirm. So S&Ps, they're diverging up here at new highs. There's a daily. Maybe we could get to 49. Maybe we're going to back off from here. But I'd be very careful getting long here. A lot of guys I know that are looking to sell this rally are looking for 4,900 before that happens. So we'll see if the market starts paying attention to yields in the dollar next week. It's hard for me to get very long-term bearish on almost anything if I'm looking for a dollar decline, because a weak dollar, after we complete up here, is not risk off. If it's going to become risk off, that would be something new and something to address when it happens. I'm not going to anticipate it. But normally, a weak dollar is very bullish for commodities. It helps stocks, it's risk on. You get nominal gains just based upon the decline in the dollar, more dollars it takes to buy something. And why don't I just wrap it with the uh, dollar longer term? And we've had a couple of nice tests here. 101, 101, false breakdown, but back above 101, it rallied, went to 101 again and rallied. So we've had a couple of tests here. Next time we're down here around 101 to par, I expect a breakdown and a measured move. If I just take this section of the market, call it 107 to 101, is going to give you 95. If I take the whole move from here, which was 14 handles from 107, gives you 93. And if I just take the whole thing and call it a breakdown under 101, 14 is going to get you into the 80s. So that's my look on the dollar. Some big pivots coming, some important lows coming in the minors, in my view. Have a great weekend, and don't just count your pips, count your blessings. And I'll see you in the room. Go to TradeGATEHub.com. Adios.